Good morning, Ayush. Good morning. Good morning. I hope the audio is clear. Just rechecking. Can somebody say? Yeah, thanks. Okay, all good. So we'll start at 11:02. I'll give 2, 3 more minutes for people to come in. Good morning, Medhavi. Good morning, Bhavin. Good morning, Ashish. Hi, Amit. Puneet. Hi, how are you? Good morning, Sumit. Thank you, Manvav. Good morning, Nikhil. Hi, Lokesh. Good morning, Vishwam. Good morning, Mahendra. Hi, Vikas. Vikas is asking if we will be riding defense stocks. So in some of our strategies, we already are into defense stocks. Again, depends upon the strategy, um, how they will pick. Sumit is asking where we can find analyst estimator for upcoming quarterly result. I have no clue about that. Ayush has some trading question. How to exit when stock opens below our exit? So I think if you have planned for an exit and stock opens below your exit, maybe 5 minutes post it opens, you have to get out. Uh, no one right answer there. Hi Banu, hi Arinder, Randeep, how are you? Good morning. We'll just start in a minute or so. We'll get to the questions post a bit of market review. We'll do a 10 minutes, 5 to 10 minutes of market review and then get to questions. Questions cannot be of direct stock advice that we are not allowed to give. So I'll have to pass those questions which are asking specific stock advice. And the regulator also does not want us to talk about any performance related queries to influence others. So very tight regulatory code is there. So we try to stick to as much as possible. Um, Hi Jayanta. Okay, so I think we'll start now. We have a good quorum. Uh, I'll get to the questions, Puneet. I'll get to the questions. So let's look at the markets. We're starting off now. Let me share my screen. I hope you can see my screen. Just give me a second. So this is where we have been in Nifty. We started the month at 24,334, and since then we've had sort of two episodes of volatility. One was the tariff tantrum, and the other one was the the conflict at the border. Both have sort of subsided down, and we are in a very tight range of 24 400 and 25 100 since 12th of May. So entire month, almost entire month has been spent in this range. And if we were to take a look at a larger picture, then perhaps we may get some downward movement here and create a right shoulder. So this is somewhat of a inverse head and shoulders getting formed. Since we bottomed here at 21,700, we've not had a meaningful uh, sort of leg down also. Not that I'm hoping for that to happen, but most likely I think we will get a retest of somewhere near this level. And that is just my guess, that we get a retest of this level and then we go up. So that will give you ample time for consolidation, and then perhaps in the third quarter we may go up. But again, the news from the GDP front is good. The news from inflation front is good. We may get some rate cuts also going forward. Um, so things are not looking bad, but FIIs continue to be sporadic sellers, although in the last 1 month, about 14,000 crores have come in from FIIs also. If we see the chart on a weekly basis, then we are like, maybe if the market really wants to, it can go to a new all-time high within a matter of 2 3 weeks, just like when we did here. So we are well poised for a new all-time high. Uh, I just hope that it is more durable and we can sustain that part. We are well above now the 200 DMA, but I still feel that a retest of 200 DMA around to 24,000 is possible, and then we go up. So I think overall we are looking quite good versus what the worry was in the last 1 or 2 months. Rupee is also quite stable. So from all fronts, I think we are significantly not having any major headwinds at least. FMCG is one place which has some sort of worry. So if you look at FMCG index, that is looking worrisome because it is not able to even cross the 200 DMA. You can see here that it is retesting and sort of going along with it. So FMCG probably is in a bit of a problem area. IT, which was looking down dramatically, is trying to come back up, but that also is below the 200 DMA. So IT also is under pressure. And the pharma space, uh, Sinux, that is, while it is below the 200 DMA, it is looking more well consolidated and perhaps can take off from here. The issue that has happened in the last couple of months is that while the market indices have come back up, the breadth of that recovery has not been there. So very few specific segments have been moving, and for instance, defense uh, has rocketed like nobody's business, of course. So that's the defense move from uh, March, and when you compare it to the rest of the market, uh, defense is like in a different zone altogether. So that's sort of the situation on the index front. In the auto space, let's look at auto also. Auto and real estate. Let's get out of yeah. So here the recovery is nice on real estate, although still below 200 DMA. So many sectors are actually struggling with the 200 DMA, and that is not giving a lot of confidence in terms of immediately going upwards. Pharma, real estate, metals. Metals have crossed the 200 DMA, looking slightly better than many of the other indices. Energy is also down there. So everything is about to test or just crossed the 200 EMA, and there is that is where the issue lies mostly. So I think there is a good rotation that is happening. So sectors that are coming out. So like for instance, on Friday we had a out of the blue a PSU bank move. Um, so is the CX. Yeah, so this is a nice move that has come out of PSU banks, and I think uh, either some folks got a whiff of this quarterly GDP number that was about to come out in the evening, and there was a very nice large move. If you see the day, that this kind of a move is very unconventional kind of a move, and it also sort of made a inverted head and shoulders pattern right here. You can see. So this 700 point roughly head is there, and we've only gotten 150 points right now. So maybe there is going to be much more move on PSU banks going forward, and that could be a, one could look out for those kind of setups. In the let's also look at gold. Um, So gold has been consolidating sideways. I mean, it is not even consolidating downwards. It is virtually consolidating sideways, and it's allowing the moving average to catch up. So maybe another month or so can be spent here, and then the festive season and the seasonality of gold can pick up. Just to give you an idea where we are in terms of gold. Just see what gold has done since September. I mean, Nifty since September. Yeah, Nifty is down 2%. Uh, so, so Nifty is down 2%, and the hedge is up 34%. So this is the sort of remarkable hedge that gold has offered every time Nifty has not performed. So I'm sure most of you have a significant amount of gold allocation. Bitcoin of late is looking tired to me. I mean, just look at the move here, and there is so much narrative around Bitcoin right now. Bitcoin reserve is getting formed. US is pro Bitcoin. Trump is trying to do so many things, but still, like, I don't see, it taking off in a very big way. So it did have a very nice support here right at this resistance, and then it has kind of made a double top kind of a situation and is coming off. um, doesn't look very encouraging, but then Bitcoin is something that really can do anything. The dollar index is the sort of, I would say, this level of nearly 100 is it is sticking on to it, and I think the Trump administration also would like the dollar index to fall, and that should help Indian flows and emerging market flows, gold, all those things should happen. Another indicator that we could look at is oil. I think oil is in a bad shape. We are at $62, which is telling you that the global growth is nothing exciting right now. And if you actually see, oil is where it was almost 20 years back. So the entire world has inflated, all asset classes have inflated, but oil is where it was. And that tells me that, we are in some sort of not such a nice situation globally, at least. India, of course, can do some magic perhaps, and we'll attract more flows. There was also one last thing that I want to talk about is somebody had sent me a comparative valuation of Indian market, and we are far ahead of almost others. Although I don't believe too much in this valuation business, but if a significant number of people follow this, um, they will hold their hand back in terms of committing to the market. So, and this is the last item that I want to talk about is the 30-year government yield. Uh, so while we don't talk about the bonds or the bond yields too much and give equity a lot of importance, I think the entire world runs on the state of the bond market. And the bond market is a much larger market, and basically the yields determine where equity will go. If yields will go higher, like we've gone from 1% to 5%, sooner or later there will be, something that will go bust, because you can't sustain the kind of debt that we have, 36 to 37 trillion on US books. Somebody, some institution, some bank, something will go belly up, and it will cause some sort of issue. So we are living in a world where some drama can happen anytime, any day. So that we have to keep in mind. We can't leave equity investing, but we have to keep in mind that we are, on that path where, you could fall anytime. So for that, allocation to other assets and hedge and all that is very, very important. So that is not a clear path that you can just unbridled uh, go along without worrying. There is a lot to worry about if you have to, and India will not be immune to all that if and when that were to happen. So let's get into questions. We'll have this session go on till 11:50. Uh, and I'll try to answer the questions as much as my capability to answer. Puneet has the first question. The whole purpose of momentum strategy is to get out of underperforming uh, sectors. How does rotational strategy work in that case, especially if you have long period of underperformance in markets? So as new sectors will go up in terms of performance, when the rotational strategy will rebalance, it will start to pick stocks from the sectors that are performing, and hopefully that sector will continue to perform. There could be situations where you will come into that sector and that sector has picked out. Then you will go to another sector and that sector also has picked out. So sometimes that can also happen. So you need sustainable long trends for those momentum strategies to do well. And that is the whole purpose, that you stay with the winners of the pack and not with the losers of the pack. But of course, there is no guarantee that every time it will work to the T. Um, Performance related questions I sincerely can't take. Uh, this question, if somebody has an answer, you can give the comment to Mr. Sumit, where to find upcoming results. Um, okay. When we sip on, Kishore has this question, sip on existing small case, there is already a rebalance where a new stock is added. Should we buy more stock in newly added company based on that ratio? So the typical answer that I would have for this is that whenever you will rebalance, do your SIP post the rebalance. So let's say on 1st June you are rebalancing, then you can do the SIP on 2nd of June, so that you are putting additional money in the newly formed, newly balanced um, portfolio. Ramu says, I'm sorry, MI Evergreen, can you add silver ETF and reduce the weightage for gold? So, I mean, one could do anything in terms of changing it, but once a strategy has been launched and hundreds and thousands of people are using it, you can't just tinker with the design of the strategy just like that. You personally may like lesser weightage of gold, somebody else may like more weightage of gold, and a third person may just like the current weightage of gold. So we can't tinker around with strategies like this. Maybe someday, if it's silver ETF proves its worth. First of all, silver ETF has had a very narrow history, and second of all, I really don't believe that silver ETF has that kind of a weight in the monetary system as gold does. So someday some other product perhaps, but not MI Evergreen. Views on insurance sector. I really don't have any strong views on any particular sector. I only follow their trends. If you like, I can show you some charts of insurance companies. They are doing very well. We have had some companies come into our strategies recently, and they are all very near within 10, 20%, 10, 15% of all-time highs. So insurance companies look to be doing quite well. Ayush says, please share some Indian bond GSEC ETFs. What are the risks associated and the returns expected? So I don't have much knowledge about it, Ayush. I hope you can find somebody who delves in the bond market. I have a view that bonds don't are not serving the purpose that they were supposed to do now. I mean, there was a 40-year period where global interest rates were continuously coming down. Now we are in a period where global interest rates are rising. India is still not so impacted, but I think globally we will not see a down move in interest rates for any longer. And when interest rates don't move down, they move up. Bonds are actually, by nature of the setup, uh, not such great investments. As yields will move up, bond values will come down. So I think from that perspective, I've replaced gold with the what would should have been bonds in my portfolio perhaps. So I only do equity and gold, and that has served me well. Harinder says, Capital Compounder, NNF10 and MI Top 10 need advice whether I should move out of NNF10 and Top 10 to Capital as there is an overlap. Yeah, if you have Capital Compounder, you really don't need NNF and MI Top 10. That will the HNI Capital Compounder will have focus on the top 20 stocks of top 200 stocks, and NNF and MI top 10 are concentrated bets on top 50 and 51 to 100. So you can choose to let them go. Bhavin says momentum strategies were in uptrend till October 24 and started downward. Then after from January it has started underperforming compared to benchmark. Is this normal? With strong shares, why is it so? So in short time frames, it is possible that some strategies will not do well because the big chunk of the gain comes when trends are strong. Uh, and when the markets are down, we will, be down with the markets. Sometimes underperforming, sometimes outperforming. So beating the market at all times perhaps is not possible by any strategy, momentum or otherwise. Uh, Narsima says, when is your SIF product getting launched? Did you mean an AIF? So AIF is in the works. AIF possibly sometime end of this year, perhaps. Not sure. Um, Randeep says, what is the appropriate time to rebalance the small case during the market hours? So there is no one right time, but I would suggest that you allow the markets to stabilize. So first, let's say 15-20 minutes, one should not do, ideally. And then post that in the next few hours, any time should be a good time. The model portfolio will assume a um, weighted open, high, low close of that day as the buy or sell price for the model. It is not the previous close as some folks think, but it is going to be the average of the open, high, low close. So over hundreds of transaction, it is very likely that your average uh, purchase or sale will not be too far from the model's average purchase sale. That is the idea. Uh, Update I've already given. It's in the works. It will take time. Uh, okay. EMA tool for active users has not been updated and has errors. Please look into it. So, okay, we will look into it. We really don't have a, uh, you know, demand for this kind of a tool, but if you want, we can certainly build a better one. I'll request you to just drop a email to us with your uh, with the error screenshots. I'll have the team look at it. Uh, Mungil Thotam says how HNI strategies alleviate large market orders from slipping when compared to, because the selection of the stocks in those strategies will take care of the liquidity accordingly. So most both the HNI strategies are more diversified, as well as the stocks that they will select will be taking care of the AUM that is running on those strategies, and hence, and even in non-HNI strategies, I mean, you will not find much of slippages at all, because those kind of volume filters are being used. Amit Sani says, how much capital can we deploy in Evergreen? So I think it is 30 lakhs. That is the recommended range, but do check on the website once more. Uh, Ashish says there's a recommended amount of allocation when I'm adding more. If I'm allocating less, it omits the expensive stocks. Will it affect my return in years to go? So I assume that you're talking about the invest more option on small case, and it will, the small case has its own algorithm to determine, if you are, let's say, if you're allocating 1 lakh to your portfolio, how that 1 lakh is going to be allocated. If the minimum requirement is 2 lakhs, then obviously all stocks will not be included in that, and it may omit the larger stocks. But if you are doing invest more and you are making a whole portfolio in, let's say, two, three goes, then it won't make as much of a difference as such. But don't be undercapitalized. So if the requirement is that you hold 20 stocks in a particular ratio, then you must have that entire portfolio, not just have 10 stocks, if I'm getting the question right. Suryansh Kumar says, how does Bhava Bhagwanche principle align or differ from efficient market hypothesis? So they are actually in the same line of thought, and Bhava Bhagwanche is just a Gujarati saying. It is not really a principle as such. But the fact remains that the efficient market hypothesis also doesn't work all the time. So it is like that, the markets are likely to be efficient, but they are not. So similarly for Bhava Bhagwanche also, that it is likely that a lot of times you will find that the market is going to discount ahead of uh, any news outflow, news outcome, etc., and the stocks, or the stock movement will happen upfront. So from that point of view, they will work most of the time, but not always. The efficient market hypothesis basically is that you cannot make money out of the market by having a uh, so if the market is so efficient that everything is discounted today, so nobody should be able to create alpha out of it. But that's not really how market works. In fact, the father of finance, who created this efficient market hypothesis, has a quote about momentum investing, that momentum is this anomaly that even the efficient market hypothesis is not able to understand that why it happens. So from all those perspectives, I think we are on the right path. Ashish says, which scheme do you think will be complementing MI Evergreen? So MI Evergreen is essentially CNX 200 stocks and gold. So any scheme that is focused on mid and small cap or small cap stocks can complement. You could look at MI 20, MI 35, those kind of strategies. Raghav says, how would momentum strategies work in bearish markets, and is the risk reward better to enter when markets are significantly down from all time high? So, ideally speaking, if the markets are crashing really badly, then momentum strategies will go to cash and or will go into defensive stocks, and will prevent massive bleeding like we saw in COVID times. But recently, because the bearishness in the market is very shallow, and momentum stocks in momentum come off very sharply, there can be underperformance during downtime also. So yes, the risk reward is always better when you enter, significantly when markets are down from all-time high. The risk reward is certainly better, and if you find markets are 15-20% below all-time high, I think that probably is the sweet spot where you can, invest good sums. Of course, there has been, periods in 2008 and 2020 where investing in um, uh, at 15-20% would have not yielded immediate results, but the probability is very high at that point of time. Sabarish Vasudevan says, how to do partial profit booking in any subscribed small case. So we don't have a strategy to move out of stocks in do partial profit booking. But when stocks sometimes go as much as many times of their invested uh, allocation, then we cut them back to size. So those kind of filters are in place. So sometimes, when stock has gone up 5x, 4x, 6x, that kind of a move happens, then we will take some profit booking. But otherwise, we allow the stocks to run, and whenever that phase is over and the stocks start to drop, we will get out, booking whatever is the remaining profit. But if you want to override that with some sort of a partial profit booking, then you could rebalance basically some profits uh, out of the strategy. And most of the rotational strategies actually will do a rebalance of allocation. So, for instance, MI Evergreen, NNF10, Top 10, they are all reset back to original weights every month. So profit gets booked, and stocks that are bleeding also get more allocation in case if they are not moving out. In MI20 and MI35, this reallocation of weights happens once every 6 months when the underlying index changes. And in other absolute momentum strategies, we do a profit booking once they achieve a certain multiple of the original allocation. So that's how what is the internal mechanism, but you can create an overriding mechanism of profit booking, a layer of another rule perhaps, that if my stock uh, I don't recommend that because it interferes with the natural outcome of the strategy. But if it gives you any comfort, you can certainly do that. And there is a mechanism in the small case app to do this. You could do a partial withdrawal, and it'll but it'll what it'll do is it'll proportionately remove. Let's say you have a portfolio of 10 lakhs and you want to remove 1 lakh. It'll proportionately remove that percentage from each stock to get that 1 lakh out for you. I don't know if that answered your question. Abhishek says, why don't you make detailed video with similar timeline and procedures for gold and silver? uh, Gold for silver. Gold, you've already made so many. So, there are so many commodities. I don't have any interest in many of them. And I think gold has relevance because of its role in the monetary system. Gold has a proven um, complementarity, especially with Indian stocks. So why should I do anything for I mean, tomorrow somebody may say, why don't you do charts for Jeera and Dhania? You know, I certainly don't want to get into that space. Harinder says the rebalancing that is suggested by weekend is different than what small case suggests. Okay, so I get your point. So we will tell you how many stocks are changing. Let's say two stocks are changing. Uh, what may happen is that because some portfolios may be either undercapitalized or the algorithm, when it runs in small case, it may detect that your allocation to a particular stock, let's say it is 2.4%, and the required allocation is 2.8%. It may ask you to add one more quantity or two more quantity. It's called incremental changes, to bring your portfolio exactly in line with the model. So there are two things that you could do if you want to avoid this. First is, of course, to have a proper allocation of capital, uh, due to which these things normally occur. The second is that you could ignore these incremental changes. So weekend investing is telling you buy this, sell this and this, two to buy, two to sell. So when you go to your small case rebalance, there is a button called customize. So you can customize your rebalance. You press that customize and only allow those two buys and those two sells to happen. Rest you ignore. You can adjust those quantities so that it won't do those buys and sells for you. And once in a while you can run the full rebalance just to be in line with the model. So that's where you can reduce. I suppose you would like to reduce some transaction cost by doing this. That's the way to do it right now. Uh, Puneet says, what is a good time to invest in momentum strategies in rising or falling markets if one wants to try and time the markets? So again, it will be very difficult for a straight response on this, because if you knew that the rising market is a sustainable trend, then one would want to be there. And if you knew that the falling market is not going to fall much further, then you would want to be there. But then again, how to predict that is the question. So, and most of our strategies, at least, uh, we are looking at long term outcomes. So, for 3 to 6 month kind of timing games, you'll have to make those estimates. Suppose you're estimating now that maybe in the next 6 or 8 months, Nifty may perhaps do a 15% jump. Then perhaps you can take a bet at a rising market and go along. But I don't recommend for most investors to do this. Manas Chakrabarti says, any plan to start mutual funds in future? It is more tax efficient. Let me know. Thanks for all the knowledge sharing. So thank you, Manas. We don't have any plans to start mutual funds for sure. It's a very large business which requires large capital, which certainly I don't have. Um, it is more tax efficient. Yes, I fully agree with you, but the tax efficiency is in play only if the returns from small case that we are running in the current mode or in a PMS also, which is also similarly taxed, or a AIF, is not too far from where we will achieve in a mutual fund. So this, 100 to 200 basis point difference that one could achieve, certainly, if that is the only gap, then it makes, yes, much more sense. But then uh, most of the time, I would think that the gap is much wider than that. And as I mentioned, there's a lot of capital requirement for a mutual fund business. Certainly, I don't have that kind of money. HNI capital, can I go more than 1 crore in HNI capital? We recommend you to invest 25 lakhs to 1 crore. But yeah, I mean, little bit here or there doesn't will not make any difference. Quicksilver says, do you look at qualitative data also when doing allocation, including guidance and anticipated government policies or sector movement? No, we don't. Ayush says, how long and by what extent Nifty 50 can be uncorrelated to mid cap, small cap sectors? Is it worth look for relative strength when broader market is falling? It's like selling against the current. I think uh, if you look back at 2018 period, you will see that how Nifty 50 was completely uh, non-correlated to mid caps and small caps uh, or some sectors. Relative strength is certainly a great tool to look at and do discretionary trade. Non-discretionary systematic trading in using relative strength is also is possible actually, and that's what in some ways momentum strategies are achieving to do that even when market is falling, trying to look for sectors that are outperforming or not falling at least. So, uh, I mean. I think correlation can break down significantly. So I typically don't want to rely on historical correlations for determining what kind of allocation needs to be done. Is a short answer. Chinta Reddy says, as a shareholder of a company, do we have a privilege to visit their manufacturing facility apart from AGMs if held in physical mode? Any other privileges do we have, please? Um, I think you can write to the investor relations officer of any company and request that you would like to visit their facility. Perhaps some may agree. Perhaps some may have a group kind of a visit plan every other month or so. Uh, Privileges, I mean, you are a shareholder of the company. That is a privilege that you have. You will share the earnings of the company. You'll get the dividends from the company. You'll get an annual report to read. I mean, those are the privileges that you have. Some investor relation company groups, departments of the companies are very investor friendly. Others are not. So I don't think I can say that any shareholder can say I want to visit your plant and they'll agree. Um, Many companies have millions of investors, so I mean, entirely possible that they may refuse. And also plants, depending upon manufacturing facilities, could be hazardous and those kind of things. So they may take that kind of a excuse that it's a risk visiting those plants. Uh, Gaurav says, any plans of increasing max portfolio size for NNF10 all cap strategies from 30 lakhs to 50 lakhs? We review this from time to time, but right now that's the limit that we are sticking with. Arvind says, on what basis is the decision to rebalance made on Monday? Generally, Mondays experience high volatility. Would you consider switching to another day with lower volatility? So the answer to it's a good question actually. Um, the answer is that we have done studies in the past, long time back, perhaps in 2015, 2016 period, where we found that the weekly close of Friday is sort of the most decisive close, where most traders who are trading on a weekly basis use Monday to Friday as their standard week. And we tested the same strategies if they were ending on Monday, if they were ending on Tuesday, if they were ending on Wednesday. And we found that the most uh, appropriate week to be defined as Monday to Friday. Uh, Monday could have more volatility, but over a longer period, I would imagine that it will, you know, if you were to run it on other days, it will compensate for the change over a longer period of time. Um, uh, and volatility can cut both ways, right? I mean, if you are selling, you may get better prices. If you're buying, you may get worse prices if market is higher or perhaps lower on the other side. So I don't believe that Monday is of any disadvantage. Um, that's sort of my thought on that. Skipping questions that have been repeated. Uh, okay. This is a good question. Amrit Singh says, why Nifty Next 50 behaves like a mid cap index being a large cap index? So I think in our definition, we have called top 100 as large cap. There is no science to this, right? That top 100 should be large cap. It is just a way the regulator has defined the market. That 100 top 100 is large cap, then the next 150 is mid cap, and then it is small cap, then nano cap, and so on. So micro cap, what I don't know. So I don't think there is any real science to this. And there were a couple of studies that we did where we actually demonstrated that stocks, once they move into Nifty, become very dull. Once they move out of Nifty, so stocks that go from Nifty Next 50 to Nifty, they do very well when they are in Nifty Next 50, and they don't do so well in Nifty. And then when they come off, they start doing very well again in Nifty Next 50. Perhaps because when stocks move into Nifty, they are under extreme focus or visibility by so many algorithmic, uh, arbitraging funds. All kinds of strategies are being put on those 50 stocks, not as much on those rest next 50 stocks. So the next 50 stocks still have, some natural movement happening. But these top 50 stocks, everybody's watching them like a hawk, over researched, over owned, over, being played by all kinds of algorithms. Full options, are being played on that. So I think that creates a very different behavior of Nifty stocks versus Nifty Next 50, which you are very rightly said actually has been behaving like small caps. So I that's the sort of only answer I have. Uh, Harinder says, what could be the complementary strategy along with HNI Capital for capital preservation and wealth building? So HNI Wealth Builder is the perfect uh, combination along with complementarity with HNI Capital. These two are designed so that it becomes like a complete set where one is um, looking at large and larger mid caps. Other is looking at the CNX small and mid cap 400 kind of approach, and one is rotational, one is absolute. So you get the best of all worlds within these two strategies. Okay. Hem says, please provide a tool on weekend investing hub for gold to equity ratio so that we can move from one to the other. Okay, that's a great suggestion. I'll certainly have the team look into this. It's not difficult to make, I think, and we'll implement this. My request is if you can just drop us an email for this, and I'll have the team do this. Hi Suresh, thanks a lot for your wonderful presentation. Any plans for Hyderabad meetup? Yeah, I want to come to Hyderabad, but maybe towards the end of the year, perhaps, or certainly I have to visit Hyderabad in January of 2026. Uh, Certainly, we can meet in that month, if not earlier. Abhishek says, in context of mutual fund investing, apart from momentum-based schemes, should we also have value and growth schemes in momentum might not perform during bearish phase? Certainly, you can try other things. I don't think anything else will also perform during bearish phases, but if it gives you a lot of more confidence to do that, certainly you can try value and growth as well. Why not? So I've come to the end of all questions. First time, I think. Thank you so much for joining, and we had a nice Q&A session. And I have one last question. Okay. Abhishek says, what should be their combination? Should we have a 3 by 3 matrix, large mid cap and small caps, value growth momentum, and fill all 9 cells with different schemes? What are your thoughts? Yeah, I think you could do that. Just make sure that the schemes of for growth and value that you choose, they should be well structured schemes and not completely discretionary. I certainly don't have too much faith in discretionary system. So um have some systematic approach if some manager has towards this, then essentially that will be a better one. So that's, I'll be closing now. Thank you so much for all the questions. If I missed some questions, I'm sorry. We'll take it up in the next one. But have a great weekend, and I'll see you next month on this forum once again. Thank you. Bye bye.